The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And it's a interesting morning, to say the least. Got the metals moving and shaking, and just all sorts of crazy things happening. Dollar yen getting literally just nailed down, flying back up, pulling back down. Gold just moving out of nowhere. There's a rumor of a Moody's, rating coming out soon that may be the impact on that. You got silver shut down, I want to say it's 3 or 4 times last night. So, halted in trading because it was moving so far so fast. And so, like I said, just some absolutely astronomical moves going on. And looking on over right now, and we got silver. It is currently up nearly 2% at the moment. So off its highs there. You got gold up 1.5%. And, it literally just springboarded and launched about 20 points in about a minute and pulled right back. Looking over at the S&P, we got S&P right there up 5 points, Russell up 4.7, NASDAQ up 0.5. We got the Dow up 30 with oil up 92 cents. Natural gas currently at 0.078 with corn is down 8 points while soybeans is up a whole 3 ticks. Euro dollar up 44, Aussie dollar up 79, pound dollar up 73. So dollar is moving on down there. Got the USD CAD down 28, USD Franc down 57. Euro yen is down 70, pound yen down 69, and US yen down 81. And like I said, we had some major moves on all these currencies right here, the metals and everything going on. And gold, of course, moving very fast. So it's one of those things you just really got to put all the pieces together. So. So pull this up and let's see what we have. And like I said, first thing, let's go ahead and look over at USD yen. It had just that massive move. And there we go. Okay. So pulling that on back up, you can see it literally it gapped down half a deviation, flew on down past 1 deviation, pulled on back up to the negative 0.5 there, came down to 0.7, oscillated for a while, hasn't made it back down to that half deviation. And it's just been a very, very difficult trading environment. So just due to the speed of the moves that are happening right now. And looking on over here, checking out gold. So gold, you look at the thing, and it just skyrocketed an insane amount of volume, 25,000 contracts. Again, that's 25,000. Yes, I said 25,000 contracts. And is that big? You hear like S&P and stuff, that sounds like nothing. But that's actually absolutely massive for gold. And you can tell just looking back over it, historically, we don't see that kind of volume on gold. So, it's not a normal thing. And it wouldn't just appear like a 100-point move. Just flew up, came back down. And just to show, what does normal gold, quantity right here look like. Let's look at this. 12 contracts, 4, 6, 6, 7, 11 at each price, just sitting in the market. And the thing just, fired off 25,000 contracts. So, just an insanely massive move. Some stops, all stops pretty much, I think, got hit right about there. And no matter what way you want to look at it, let's back it down. And that's at a 10-minute bar, by the way. If I move it on down, look a little bit tighter. At 1-minute bars, you can see pretty much all that movement happened over about a 3 to 4 minute time frame. So 12:01, 2, 3, 4, 5, 6, about took about 6 minutes, and but that's where all that volume came from, and it's spiking out right there. You can see these big spikes, over 5,000 contracts happening right up here. Where are they happening at? Right at the 1 deviation level. So that's right where we actually saw those spikes take place, where the algos were kicking in. Buy, sell orders, everything happening at the same time there, and just moving very, very fast. And, that can be a little difficult to keep up with. Things just flying that quick. But it flew on up there, and, that's about a $2,700, I guess from bottom to top, about a $3,000 move. So right there on just a single gold contract. And so very, very fast, but moved right up here. And obviously there was a lot of stop sitting up at 1390.5. And, we can back out a little bit more. Let's go back to the daily bars right here. Get a little different perspective and see what we can see. So let me drop off all my indicators off here, except for my volume. Put my volume on there. So we'll do volume, up, down on there, and we'll add in, always good to have RSI on there. So we'll check out the RSI. There we go. Okay. So I'm going back, and then also one thing that's always important on, futures, you're going back, you're looking at things, is to check it out, GC pound on NinjaTrader. That'll allow you to see a rolling contract. Makes it a little bit smoother when you're looking at everything, links everything together for you. But, you see, it's really pushing right down here towards this 1350 level. And if we back that up, let's see, we may need to load even more data in here to see all this. So let's go ahead and put see how many days it'll give us on the continuous gold futures contract so we can get just a bigger perspective of how important this level is. But you can see just the massive moves that have already taken place right there. And, there's all different platforms I use that I look at, and one of those, is NinjaTrader. But backing up here, we can see last time it was at this level, this was a pretty volatile time as well. Right here, you can see how it's just flying back and forth, chopping. So about 30 to 70 points up and down over the course of several days right here. And getting some big moves in this range. So we're at that same point. And this is where we're back in late 2010, early 2011 on gold. And, you can see all sorts of patterns. You can see head and shoulders, and you can see all sorts of patterns over here. But just definitely moving down, looking to see, can it break that low? And let's see, we have this massive volume bar. And let me add that on here. This will give some ideas on where we think things are going. But we have this massive volume bar over here, right there. And so if we line that up here, saying, basically same time, that'd have been right about there. So market, came down, had a ton of sell-off volume, did one more pullback before it broke through it. Notice how that level right there became the new resistance. We keep going, and we just, not too long ago hit this same volume level right here. That was 271,000 contracts in a day. We're at about 119,000 right now, which isn't totally abnormal. It's just abnormal to see that inside of a 10-minute bar. But that basically shows that is what you call the magnet price. Okay, so if we go over here, we go to the low of this, that's our magnet price. Gold is being pulled towards this level of 1355. And right now, we're at around 1357 for the low of the day. And then, but just, it's good to put, like I said, put all the pieces together. So we go, okay, where is it going to? Can it take this out with volume? And, in that volume, well, yeah, that's volume, but it's not abnormal. Abnormal is, up here where you're getting 2-3 times the amount. So can it take out this 1355 level with volume? If it does, then gold can continue to decelerate even further. I saw a big article I was reading last night about how they're looking like they may have more strikes and stuff going on at the South African gold mines and everything. With a lot of workers saying basically they want 60% higher wages. So which you think would be decrease in supply, which would increase price, but so far that it has sort of the opposite impact. Right now on the market. Looking over here, where are we at? Let's go ahead and bring back our normal template right here. And zoom back in. And we can see, on these deviation levels, just, where we at, like I said, on the day so far. But let's see if it'll give me that. There we go. And there we go. All right, so right up here, like I said, we busted right up to this, but what's magical about this level? What didn't it hit? It's a round number. That's another big thing to consider is 1,400. Okay, so that obviously is a very it's a psychological number. There's going to be a lot of orders right at that level. It couldn't break it. Notice it flew up, and the only thing that really stopped it was the 1,400 level itself. So if that 1,400 level wouldn't have been there, it could have went a whole lot higher. And let's see here, but there's, like I said, there's just a lot of different rumors, different things out there. But silver volume is 82% higher right now than the 100-day moving average. So, and there's a rumor going on. We'll see how this plays out, but there's a rumor that Moody's is going to downgrade the U.S. So, with everything that's going on, that's interesting. Out of all times, they decided to do it. But there's that rumor is floating, and so that's sort of, being blamed. But, that's not brand new news. That came out overnight. Will that really happen? We don't know. But let's see here. Let me go and we'll look a little bit more specifically at today's deviations. But you can see right here, it just flew up and then pulled on back. But this is, some of the stuff is the new normal. So things like this going on. Silver itself, it got halted, 4 times among its little flash crash, posted on the CME. And they stopped it for 20-second halts. And let's see, I think they might have that pulled up over here. But, it's always good. You can subscribe to actually the CME newsletters over on CME Group and, get information, news, things like that. But learn about what's going on. And, they got all sorts of updates on their new futures contracts that are coming out. And so they're trying to make smaller ones and, do different things like that. But you can go over here and you can look at the interest rates. You can look at the volume. You can see what's happening, on Open Outcry, Globex, Clearport, and everything else. And they have just a ton of information. So a lot of people don't even think about going to the actual exchange's website to get information, but it can be a great place to get, data. And so you can go over here and event calendars and, like I said, latest market reports. And so there's going to be a lot of different information, but check it out, cmegroup.com. A lot of good info for you. And it amazes me how many futures traders have never even been to the exchange websites. Or, they maybe sort of like went to it once, but spend some time on there and see what you can learn, because there's a lot of good information. And let's see here. I know one of the things I was looking at the other day where they go and they have this whole section about just, updates and reports and everything else. So, just check it out. But right there, who did it? Who knows? I imagine a lot of this was stop loss orders. So there's a lot of short orders going, and the thing flew up right past that settlement. And it didn't just go quietly, and it didn't keep going either. So it wasn't just a true massive demand. It just popped up, and it didn't have enough oomph to break through the 1400 level. So we can go over and we check out silver. Let's check this out. So it was pretty crazy as well. And look at this right here, man. It came on down 3 deviations last night. That makes, gold look tame. And just flew down, gapped, basically, right there. It opened up, then just did this, insane drop. But right to the 3 deviation level, which is statistically a 99.7% chance it's not going to end down there. And flew right up off of it. And now it's all the way up, went all the way up to 1.5 deviations before doing a pullback. So, you're talking a top to bottom 4.5 deviation move. Just some crazy things are happening right now in the markets. So we'll talk a bit more about how to protect yourself with that when we get back from this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And like I said, we're just going through these massive, insane moves that have been taking place. So you got this massive move by silver right here. And looking at the move, it obviously not only did it move down sharp and fast, but I mean, you're literally talking, I mean, what is that, about a 12? I mean, at 12.5% from bottom to top in silver. So, I mean, like from here to here. So 12.5%. And then, gold moving, what is that, 4.5% from, bottom to top right now. So, but again, not enough commitment to bring it past 1,400. So, people were wanting the cheap metal, I guess, but not so much that they're willing to make it expensive. And so they popped it up. And so, and trying to see what else do we have, because when you see things like that, you're trying to look for some good information, like who came in, who bought it, why. And it doesn't really matter. Now, this is one thing I will tell you. This is probably one of the most important lessons. It doesn't matter why it happened while you're trading. Okay? It can be really easy. And, I've been there. I've done it. It can be really easy to get caught up in, well, why'd that happen? And you want that answer before you move on. And so, you just got, a trade just goes right against you, and you're trying to figure out what happened, what's going on, how do I do this, how do I take care of it, what should I do next, because I need to know why it happened so I can know what to do next. Well, if once you figured out why it happened, it's already history. It's not going to help you with what to do next. Because what to do next, you didn't know before it happened, so obviously it's not going to help you if you know after it happened. And now, at the end of the day, can you sit back? Can you look? Can you go through the news, which is really just a current history blog, right? You can look at the news, you can figure out why it happened, and maybe you can learn something that might give you a heads up to look for something in the future, maybe. But in the reality, you have to focus on what is the chart doing at that moment and take advantage of it. Because if you spend all your time trying to figure out why something's moving, you're never going to be able to take advantage of it moving. And it doesn't matter why it happened. At the end of the day, it just matters that it happened and that it moved, and whatever it caused it has no impact on you except for the fact that you want to be following that chart. Taking your entries, putting your stops, trailing your stops, and, step by step along the way. That's part of that continued development of becoming a disciplined trader, is really just focusing on what's happening on the chart. Because all the information, all the whys, all the whats, everything are all built into one thing, this chart. They're nowhere else. Okay? You can go and you can look at 100 different sources and you can try to piece together all the bits of information, but all they're going to add up to is a bar. Okay? All that information is just going to add up to a bar. And so the fastest way to keep up with what's going on is to look at the actual chart itself. So that literally, there's no faster way for you to stay on top of the markets than just to follow the charts and trade what you see, not what you think. Trade what you see, not what you feel. And whether you don't trade your profit and loss. Trade what you see. And in the end, let the profits take care of themselves. Don't over leverage your account. Don't put in too much risk. So when there is a loss, you can move right on to the next thing. And do understand crazy things happen. Now, there are different ways to manage this. Really, this is the new normal in the markets. Just you never know when stuff like this is going to happen. So what can you do to help at least manage some of that risk? There's ways you can avoid getting stopped out on it. There's also ways that at least you can define the risk. Because what if you were in that trade and let's just say you were short and the thing popped 100 points in gold and not just 20 or 30? Okay? How do you handle that? From low to high, from 9 o'clock, it's a big move. But I'm talking about the fast move that happened like right at 12 o'clock right here where it just flew. So how do you handle that? What are some good, healthy ways to handle that? And part of that is, of course, never over-leveraging your account. The other part of that is going in and literally just asking yourself, what am I going to do, take advantage of each piece of the different instruments that are available out there and put them all together. And one of those things is you can look at Nadex. So all Nadex products, all of them, okay, the spreads and the binaries, whichever one you prefer to trade. We now have a binary scanner. If you haven't seen it, check it out. They all have defined risk, okay? So you can go over here. You can trade gold. Gold's about to shut down. But you can trade gold. And, you can look at these trades. You can take advantage of them. But they're all defined risk. So I'll talk more about that when we get back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we got the Fed testimony coming out. People trying to sort of figure out what's going on. What is Bernanke going to do? Are they going to keep up all this bond buying? How are they going to taper it off? And it's trying to put all the pieces together. And let's see here. We got, let me go through the week real quick. I want to check out what we have coming up. Because I know Bernanke, he testifies Wednesday. And so I doubt that we're going to see just a massive move in the market going, waiting on his testimony. Because the market is really waiting to see what he's going to say again. So is it on firmer footing? Can they start backing it off? What's going to happen? But this is not just a speech by Bernanke. This is actually his congressional testimony before Congress. He'll go and he'll read a prepared statement, and they'll make it available on the Fed's website as soon as he starts talking, type thing. So it'll be released like immediately before he says everything. It'll be out there. Then the committee is going to sit back and they're going to start questioning him. So it's Q&A, and nobody really knows exactly what's going to be asked or exactly what he's going to say. He usually just sort of looks at them like they're dumb, and he's really nervous when he talks. And I can imagine. I can't even imagine. But he answers the questions, and he's like, "No, that's not right. And this is how it is." And right or wrong or whatever, everybody's going to be hanging on every word that he said. But, the big question is, how are they going to taper this off? obviously, yeah, all the Fed bond money goes back, and the Feds are buying from the Treasury, and then they're paying all the profits that the U.S. pays into the pays the Fed for all the interest. All that money goes right back in the Treasury at the end of every year. And a lot of people don't know that that's sort of the end game. Okay, it's like Fed buys from Treasury, Treasury pays Fed interest for doing so, Treasury pays back, or Fed pays back Treasury at the end of year everything it made. So all profits in the Fed and back in the Treasury's coffers, and that's why the Fed has the ability to write unlimited checks to buy bonds, because all of its profits come right back to the Treasury. So it's a very interesting game that they put together. And so, now you got Ron Paul talking about ending the IRS. I mean, just all sorts of crazy stuff coming out right now. And I don't know how many people are, for or against that idea. But I know we all have our opinions, to say the least. But there's just a lot of things happening. And, the Obama administration getting nailed from every direction right now, trying to deflect it in every way that they can. But in all this, and all these things that are happening, Europe, we're talking about tapering off. Europe's talking about ramping it up. Japan's like, let's go full throttle, pedal to the metal. So all these things are happening. This isn't going to subside in the next few months. It may not even subside in the next few years. You got Obamacare going to be kicking in. That's already increasing spending in a lot of healthcare areas. It's causing shortages. Now that it covers breast pumps. So now there's a shortage of those. I mean, there's all sorts of just weird things happening out there. Is the Obamacare stimulus going to be enough to carry it through? Is there going to be enough money in taxes to pay for it all? So there's all these things that are happening. So what does that mean to you as a trader every day? Okay? It means that there is just, not only has volatility been here, but it's here. Volatility is here to stay. And how can you help cap your risk if you're trading in these environments? And one way is you can trade Nadex. So on Nadex, if I go over tfnn.com and click on Nadex right here, okay? And when I click on that, then I can go to our products and demo account, okay? Sign up, takes about 15 seconds to get a demo. If you want to know how to get that extended, just email me here at TFNN, dmartin@tfnn.com. I'll be glad to help you out. Also, to create a live account, it's only $100 to fund a live account. Okay, so you click start, you can get it funded. It takes about 5 minutes to go from start to funded on an Nadex account. Why would you want to do this? Well, let's look at some of these trades you can do. Okay, currencies, euro dollar. I can go in here and I can put on a trade that can expire at 3 o'clock on the euro dollar to control basically a mini lot, 10,000 units for only $13 in risk. $40 in risk, $115 in risk. I mean, different expiration times, different widths, different things like that. But I can go in and I can put on a trade for a lot less money. And I can choose to maybe take on a few more pips of risk to not be stopped out of a trade. So like break-even distance. So that one of the things is that no matter what happens, though, no matter what happens, if it blows up, at least my risk is capped. I can't lose more than my max risk. It doesn't mean I have to risk my max risk, but it means I can't lose more than my max risk. So if you do get a 100-point move, something blows up, whatever, your risk is capped. Okay? The second thing is I have trades, and you have to look a little bit more, okay? But I have trades I can check out that might actually help me cap that risk quite a bit, okay? And, some of them, the risk isn't going to be that much different, but look at this. Okay, this is S&P 500. It's going to expire at 4:15. It's only one tick away from break even, literally a tick. So, it's trading basically on par, okay? And I can go in here, and my max risk is $103. Well, if I want to do to get $50 a point, like I would on the S&P E-mini, I need 5 of them because they're worth $10 a point. So when basically a 1-point move in ES is is worth $10 on a US 500 Nadex spread. It's worth $50 on an S&P E-mini future. So if I want every point to be worth $50, I need 5 of them. Okay, what's your margin going to be if you want to go trade the S&P? If you want to intraday trade it, you're talking probably $500, $400, maybe $1,000, maybe $1,300, depending upon what broker you use for intraday trading. $4,000 if you're holding overnight. So you can go in here, and for the same amount of margin, you can put that up. Does it mean you have to hold on to it? No. Now, if I go and I sell an S&P future, and basically $500 would be like a 10-point move. What happens if the S&P moves 30 points in a split second because of some weird news report that comes out? I could lose a lot of money. What would happen on this? The most I could lose would be $100 a contract, $500. So at least it's capped. Okay. Now, there are other contracts that may have lower risk that might fit better with what I want to do. I might also, we look on, both sides of the trade here, and we can find some that, may have even less risk, like $50 risk right here. Okay. So I could only put up $250, meaning I couldn't lose more than $250 if I had 5 of them. So my margin can be about the same or significantly less, but my risk is always capped in case something does just blow up. So that's the number one way right there. You can go in and you can trade these crazy volatile markets and at the same time have completely defined risk in your trading. And so, I try to, I urge people, I'm like, go in, check this out, and will there maybe be a little bit of a learning curve for you? Yeah, probably. But, if you can use less money to place the same or very similar trade and have capped defined risk, so more leverage, okay, defined risk, and, you can't get margin called. Is that worth maybe a little bit of your time? So to me, it's definitely worth it. So to you, I would think it'd be worth it. And the spread scanner, it can help in a lot of different ways. Like, check out these 2 spreads right here. This one, both of these spreads are going to expire in 152 minutes at the end of the day, 4:15 p.m. Both of them are about 8 ticks from break even. Well, 8 ticks, by the way, on a US 500, tells you right here, is 0.1. So that means, not quite a point, about 3 ticks on the S&P. My risk, if I did 5 of them, about $250. All right. Profit potential, significantly different on this spread versus this spread. This is where one of the many ways where the scanner comes into play is I can actually see right here, I have $100 more profit potential on this trade than I do on this one. Am I going to get that profit potential? Probably not. Is it going to go down to 1660 today? Or up to 1700 today? Probably. I'm not expecting the S&P to fly up to 1700 today. So I'm probably not going to get that maximum profit. Okay. Now, if it does, hey, I can make it. But why would I even consider this spread? There's no reason to buy this spread right here if it has less profit potential, exact same risk, exact same break even, it's exact same expiration time. So why not take on the trade that at least has more profit potential? Okay. Well, the reason you wouldn't know is if you weren't looking at this, you'd have to be hopping between multiple different Nadex screens and trying to go, well, is it this one? Is it this one? Is it, which one is it? So I can go over here and go, S&P 500. And I can start clicking. I literally have to go through all these. It's like, oh, wait a minute, I need to go to the spread. So I go to indices, US 500. Okay, you got these. And then I got to open them up, and I got to calculate risk reward, and I got to know what the underlying market is to calculate break even, and all these other things. Right here, all the math is done for you, and it's organized for you. And then you literally just go up here. You can choose, demo or live, and then you click the buy button, and it opens it up for you. And once it's up, then you're able to put the ticket in directly into the platform right there. And something else you can do. So those are the spreads. We also have the binaries. Binaries are a totally different animal. They're not the same at all. Okay? We can go over here, and we just added a new feature today with the live and the demo. So now you can get the demo data feed or the live data feed coming in. And you can go in and now open up the ticket. So if I click live, it'll open up automatically, and it'll choose the live Nadex platform for me. If I go over here and I choose demo, it'll choose the demo Nadex platform for me and automatically fill in that ticket. And we're about to add that feature into the spread scanner as well. In the next 2 days, we'll have that in there. It still works on both, and I'd say 95% of the time, the strikes are the exact same. But every once in a while, maybe they do like an upgrade or something to the platform. It may have a little bit different strikes on demo or live. So by doing this, you'll be able to consistently, trade it without getting this instrument not found message, if you've ever seen that before, if you're already using the scanner. We also just added in a pretty cool, shout out to Steven, good idea. Got a logarithmic thing right here, meaning instead of being like every 30 minutes, it's like 5, 10, 15. And then when you get to a day, well, there can only be one day. So, we made it where it's really, really simple to be able to go in and find, narrow it down, find the trades that you want to trade. So if I want to trade the S&P 500, I want trades that expire in the next day, and I want to do butterflies. So I can do like 70 to 90. Okay? I put that in. It's instantly going to show me, well, here's your butterfly right here. If the S&P stays between 1661.5 and 1663.5 in the next 14 minutes, then I can collect basically $50 on this trade. So about a $50 profitable trade if it'll stay in that very tight range for the next 14 minutes. Now, what about an hour and 14 minutes? Well, now I get about 6 points wide. Well, what if I go to the end of the day? Well, that is a solid 6 points. This one right here is it's about 6 and 6. So both of those are about 6 points wide, but I'm making more money on this one. So right here, I'll make about 12 more bucks if I do the 415. So, and not too much different in the price. But the good thing is, the sort of one of those things, the less time there is till expiration, that can be very, very beneficial for you. Because you want it, if you're doing an iron butterfly, you want it to stay in that range. Now, you could also flip it around and go, I want there to be, say, you may say like 10 to maybe $35 risk. And what that'll do is now it'll flip to the other side. So now I can go in and look at straddles and strangles. Or I could say, $20 risk. And put that in there, it'll narrow it down for me, and if that may be too small. Why would I put 10 and not 0? So that's a question I get sometimes, because I have 0 in there. Well, then I get all these, 2, 2, 2, 2, 2, 2, 3, And so I may want to go in and at least make it we'll just make it $3. And now at least get sort of all these duplicates that are only $2 in risk, trades that I'm probably not going to take. And so by doing that, I can sort of see a little bit more realistically, what's there for me. Maybe like that 4. I'm like, okay, well, in that time frame, there's really nothing there. And you can bump it up a little bit more. There we go. And so now I can actually say, okay, here are the strangles that exist. So there's an end-of-day strangle I can put on. Expires in a few hours at 4:15. And I could put it on for about $30. So I could strangle or I could straddle. Meaning I could say, hey, it's going to go outside of this range or it's going to stay inside of this range. And either trade would be basically an acceptable trade for me to be able to do. So if I want to be, random walk is I don't care where you go, just go somewhere. Neutral is I prefer you stay flat. Up or down a little bit's okay, but in the end, I really don't want you going anywhere outside of this range, or at least don't expire outside of this range. And so if I go in here and I put, say 70 to 90 or 70 to 80, whatever. I have to reset that because we have some quick checks in there to make sure you don't accidentally mess up. Like if I put in 15 and 10, it'll automatically bump up the number. But so right here, so now I got this range-bound strategy, stay in between these 5 or 6 points, collect money. And anyway, that's just one of the ways that you can use the scanner. But it's a whole lot easier because, again, I can see the sell price, I can see the profit potential, see the max risk. And a lot of times people look at this and they're like, well, why would you want to do a trade where you make 25 and you're risking 73? Well, if I'm doing this, I'm doing both of these. Okay, so I'm going to do both of them. What does that mean? Well, that means I can make 27 or make 20. I could lose 78 or lose 71. But at least one of them is going to win and one of them is going to lose because it cannot expire both above 1665 and below 1661 at the exact same time. So if I go over here and I could make, say, about 25 bucks on this trade and I lost 75 on this one, well, then I would lose 50. If I can make 25 on this one and I could lose 75 on this one, then I could lose 50 if it went below 1661. That gives me a $50 risk on the trade if it flies up or down too far. But if it stays right in the center, I could make 50. Okay, because I can make 25 bucks on both sides. So that's a 1-to-1 premium collection iron condor. That's basically a way to put it. Iron butterfly, same thing. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. Let's go ahead and take a quick look at the news and what all is going on. So right here, what do we got going on tonight? Tomorrow, let's see, today obviously you got the bank holidays, Switzerland, France, Germany, and Canada. So all those on holiday, but it really doesn't seem to be stopping their currencies from moving around quite a bit. And let's see here, we can take a quick look at those. But, I mean, we're getting some nice, just some decent moves. And look over here. So we got, pound. I mean, just nice edging up. One deviation, even with, like I said, the announcements going on. We can pull up one more. We'll get USD CAD. So USD CAD, so sort of flat most of the day, but then U.S. markets opened up. Still moved down a solid, nice, smooth half deviation. Tonight on the Australian dollar, we're going to have the monetary policy meeting minutes coming out at 9:30. So that should cause a little bit of an impact on the Aussie dollar. And it is expected to be a high-impact announcement. However, I would not just, go in and straddle that one like crazy. I'd be looking more for some movement and just trading the charts on that one. Looking over at 4:30, we're going to have CPI coming out of Britain. They're also going to have their PPI, their RPI, their core CPI, the HPI, and the PPI output. So they're going to have 6 announcements come out at one time. We got to get some nice movement off of the pound on that 4:30 a.m. reports coming out. And tomorrow, We'll have the monetary policy statements coming out of Japan. Even though they're not technically scheduled, historically, they come out around 12:30. So 12:35, 12:40, if you factor in daylight savings times, you'll see 12:24, 12:39, 12:47. So around 12:30 is when we expect the announcement to come out. That's, like I said, it's tentative, but you just look at historically, when do they, let it go? That's sort of like technical analysis, right? So what are the patterns? And now, then they'll have a press conference. That'll happen shortly after that. And that'll go in. That basically happens usually a couple hours afterwards. That's also on a tentative schedule, they say. But again, that tentative schedule, again, very often happening within a couple hours. I'm going through and looking at all the different press conferences real quick just so I can give you a little more status update on it. But, so yeah, that press conference can come out, anytime within a couple hours after the announcement. But I'm trying to see, historically, when has it come out? Let's see, 3:40, 3:34, 3:32. So about 3 hours after. So they'll come in, they'll release their monetary policy statement about 12:30 in the morning. And then 3 hours after that, then they'll have their press conference. Then we're going to have Britain's meeting minutes coming out. And then we'll go into core retail sales on Wednesday from Canada. We'll go into existing home sales at 10 a.m. But then, probably more importantly, at 10 a.m. is going to be Bernanke giving his testimony before Congress. And the FOMC meeting minutes will then be released later that day at 2 o'clock. So it's a big Fed fund week with Australia's minutes coming out, Britain coming out, the U.S. coming out. And then we'll roll it in. We'll have a German flash manufacturing PMI on Thursday. That's usually a pretty decent market mover. It's usually a good news straddle right there. And we'll have our regular Thursday unemployment claims on Thursday with new home sales on Thursday as well. And then we'll move into some small impact, medium impact. We got core durable good orders coming out on Friday. Not a whole lot of news on Friday. But Wednesday being sort of the big day to be looking out for here in the U.S. And then, of course, like I said, that's just compounded with Bernanke talking on top of everything else. So you're going to have Wednesday, Thursday are going to be your big Fed meeting minute days. And really today being Australia, tomorrow being Japan, Wednesday being the U.S., Thursday being Britain. It's a big Fed week. So enjoy the volatility, but trade safely. Check out Nadex. I will see y'all tomorrow.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.